Look, things need to change. The bureaucratic system needs to change. How can you have growth and stability if there's no growth? No growth only will lead to instability. So perhaps the time actually has come to rethink the way the institutions operate, as well as think of a broader vision for Europe. And also this comes at a critical juncture. As I was just saying, we have a new European Commissioner coming in, new composition within the European Commission and the Parliament as well. And perhaps this new blood that comes in will start rethinking the way the institutions operate and also allow for a little bit of pro-growth measures, perhaps at the expense of the austerity measures and the insistence on austerity and fiscal consolidation that has really come to mark the previous European Commission. So definitely something to think about, and it's definitely also not a question that's going to be answered in the coming months. But I should say, as far as Italy is concerned, remember, a lot of the talk has been about the upcoming budget negotiations. If a government does get formed in the next week, that takes some of the imminent pressure off from the investment community's perspective as to the timing it would take to get a budget together to present towards the European Commission in October. That's when they have to present the draft budget. And one of the number one priorities is to avoid that VAT tax hike from going up. We talked about that in the last couple of days, and they need to find some cuts from other places to compensate for that. Certainly will be a priority of this incoming government and for the incoming finance minister when we find out whoever that is.
Well done, you. Thank you very much indeed for that. Very much enjoyed that Matteo Renzi interview. Okay, President Trump has cancelled a trip to Poland this weekend, saying he wants to stay in the US to help the government prepare for Hurricane Dorian, which is bearing down on Florida. Vice President Mike Pence will travel to Warsaw in his place to attend events commemorating the 80th anniversary of World War II. Hurricane Dorian has strengthened to a Category 2 storm, and the National Hurricane Center has warned the system could be a major Category 4 storm at landfall. The entire state of Florida is in the potential strike zone. Jay Gray is there and filed this report.
Dorian's early calling card, violent winds and driving rains battering the Caribbean. And now the hurricane is churning in the warm Atlantic waters, intensifying. Forecasters warning it could be a Category 4 storm with winds over 130 miles an hour at landfall.
Of a major storm, a major hurricane coming our way sometime during Labor Day.
The current forecast cone covers the entire Florida peninsula, and so does a state of emergency extended today by Governor Ron DeSantis.
The time to act is now.
Millions in the path of the storm are stockpiling food and water, topping off fuel tanks, filling sandbags, gathering supplies.
From batteries, flashlights, generators, extension cords, anything that they can use that are going to give them the survival.
And testing generators to make sure they're ready.
Just worry about, just contaminated water, worried about the electricity. How long is the electricity going to go out if it goes out?
Concerns shared by millions in the storm's path right now.
You can kind of see that there's, any portion of Florida could take the brunt of a strike.
As Dorian takes aim at the Florida coast. Jay Gray, NBC News, Cocoa Beach.
Coming up on the show, Europe's top football clubs find out who they'll be facing in this season's Champions League. Reaction to the draw on the way.
Now get greedy whenever you want. Subscribe to the American...
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
This meeting of the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
You did it. A-levels are finished, and now everyone's talking about what to do next. Sound familiar? If you're still deciding, look no further. Because sometimes a sunny day like today can mean a new perspective. So this morning, why not check out the courses available through Clearing at the Uni of Bedfordshire and see if your UCAS points qualify for their High Achievers Scholarship. Find out more and apply now at beds.ac.uk/clearing. University of Bedfordshire. Graduate as a professional.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront Outlet Shopping.
The group stage draw for this season's top football club competition, certainly in Europe anyway, the Champions League has been revealed. Holders Liverpool kick off their title defence with trips to Italy, Austria and Belgium. Adam has more, and I guess the question is, certainly for someone who is more jingoistic, which English side will win this year, Adam?
Well, they had it completely wrapped up last year, Steve. You're absolutely right. But the draw for this season's Champions League has already been made. We were only looking at Liverpool lifting that trophy on June the 1st, but we're ready to do it all over again. Now, Group A is where the big names have been paired together. Paris Saint-Germain and Real Madrid will be going head-to-head in the first game in that group. Will Neymar still be a Paris Saint-Germain player? The European transfer deadline expires over this weekend. Into Group B, Tottenham, last season's beaten finalist. They're in there with the German champions Bayern Munich. Manchester City, the Premier League champions. They got a domestic treble last year, but they are desperate to win the Champions League as well. They've got a very kind-looking group with Shakhtar Donetsk, Dinamo Zagreb and Atalanta from Italy in Group C. Now Juventus, they have Cristiano Ronaldo yet again in their team for a second season. They are keen to win the Champions League. They seem to have Serie A wrapped up every single year, but they've got Atletico Madrid to deal with. Cristiano Ronaldo has had happy memories in the Champions League against them. And speaking after the draw, well, he was giving his reactions to just what could be in store this year.
I don't know what's going to happen this year, but when the year starts, I'm always confident. And this year, I'm not change my mind. Last year was amazing. We win the Super Cup, we win the Serie A. I won the Nationals Cup for Portugal. So this year we try to do the same. The Champions League, Serie A, we have the Euro Cup here as well. So step by step, and we will see what's going to happen.
Ronaldo pointing out that he won the Euro Nations Cup for Portugal there. Now, what of the champions, the defending champions, Liverpool? They've got Napoli to contend with in their group. They came face-to-face with them last year and only just scraped past them at Anfield to even make the knockout stages. More silverware was picked up by a Liverpool player last night. Virgil van Dijk was named UEFA's Player of the Year, the Men's Player of the Year, beating off competition from Ronaldo and Lionel Messi. Lucy Bronze of England and Lyon picked up the Women's Award for that one as well. Moving on down the draw, Lionel Messi, well, he and his Barcelona team so well beaten in the second leg against Liverpool at Anfield last season. They go to Borussia Dortmund and Inter Milan, of course now with Alexis Sanchez and Romelu Lukaku coming in from Manchester United over the summer as well. Interesting fair group in Group G with Zenit heading up that one and Chelsea, Ajax, Valencia and Lille making up the draw. Three Premier League sides are in pot one for the first time because They won both European competitions last season, and of course Manchester City won the Premier League as well. It all gets going again in the middle of September, all leading up to a final at the Ataturk Stadium, where Liverpool will have fond memories from 2005. That is in Istanbul on May the 30th, 2020.
Was that when they came back ridiculously from way behind?
Yeah, they were 3-0 down at half-time to AC Milan.
And was that Steven Gerrard's...
Yeah, he did quite a lot by himself. And the rest of the team, actually.
He did the same against us the year after, actually.
Yes, the FA Cup final. We can talk about the FA Cup final 2006 as well.
Yeah, it's phenomenal.
Is a man bun ever acceptable
What's
on
a
a non-footballer? Just to go back to those pictures of our friend Mr. Van Dijk.
What's a man bun?
Well, you know what a man bun is.
No, I don't know what a man bun is.
Carroll was a big fan of the man bun, wasn't he? But,
I can't see any man buns.
Yeah, it's the hair. It's the little knot at the back there.
I've never
you get away with it if you're a footballer.
I think he looks great. Is that a man bun? Shall I try it?
I think you should. Have you got enough hair left to...
Not
to make it
really,
work?
no.
Okay.
No, I think it works better on him than me.
Maybe, Fahad, you could kick off that in... well, maybe not. Cruel. We'll see
I thought I was bad on goal.
Adam,
Look at you.
Adam. And I should have looked before I started. Fahad Kamal is with us, Chief Market Strategist at Climbwalk Hambros. He laughs sympathetically with my plight. You know what? Let's do our audience a favour here, because we get into the market so often and we neglect some of the basic things like how you build a portfolio when you are facing this many challenging market stories. You know, all that classical stuff about lifestyling the product, and you match your bond and equity positions, and then as you age, you gradually increase your bond holdings and you lower... All that stuff seems to have gone out of the window because, as you pointed out earlier on in the programme, bonds are not doing the traditional job of being that counter to equities.
Well, not quite. I think that in the event of an equity sell-off, of any serious proportions, bonds, even at these hideous levels, will become dearer still. So in that sense, I mean, at the extremes, I think they still will perform the inverse correlation that we so seek from them. But yes, I mean, the expected returns from the bond index, really from government bonds, is negative over the next 5 years. That's our expectation. It's not great. So what do? One, obviously, that biases us more towards risk, and that's one of the realities of the markets right now. While equities are not screamingly, attractive, they are compared to everything else. That's been one leg of it. Second of all, I think what's important to realize is what not to look at as much as what to look at. We don't really care about geopolitics because it proves very ineffective in making investment decisions, and we don't really care that the economic environment is in a slowdown, because a slowdown is quite good for risk assets as well. What's to be avoided is a hard recession, and that is not something we see coming, and therefore equities are where the bulk of our assets lie still.
The other aspect to this, which I'm interested in your thoughts on, is geographical allocation, because quite frankly, unless you've owned the US in recent years, you will have underperformed broader US portfolies, right? I mean, everything else has just been horrible. When does that change, or doesn't it?
Well, it's a multi-trillion-dollar question. The U.S. has been the star outperformer within the equities complex because of its huge weighting to tech. I think that's probably an inflection point now. The reason being is, if you look at the valuations for tech, we've gone from about 12 times 5 years ago to about 24 times now. That's literally a doubling. The multiple has expanded by twice. Do we expect over the next 5 years for that to repeat? There's no way.
But just before it all went horribly wrong, 1999, 2000, 2001, the valuation on the Nasdaq got to, funny enough, you mentioned 24 times there, got to virtually double that. Around about 48 times forward was the mean valuation, I believe, of the Nasdaq, right at the tippity top as well. So whilst I have enormous sympathy for what you're saying about the doubling and can we do that again, or are we likely to, the market can run away with itself for a very long time before it reins itself in.
Yes, it can. Of course, but that tech complex in the late 90s was very different than the tech complex we have today. These are real companies that make money.
They are real companies now. So Many of them are. Many of them are still using the same old, we can make money at some stage down the line, but we're not going to tell you when.
But they have
others
serious
of them
revenues.
have proved, the Amazons of this world,
Yes.
which have been at the forefront, the spear point of this rally, they have proved that when they decide to, they can make vast amounts of money. So is it so different? In fact, if it isn't, it might be different in the fact that actually some of these companies have proved they can make money, so they actually would justify those high valuations maybe.
Well, that's why, it's obviously why they are valued where they are, right? They have a growth profile that's sort of impervious to geopolitics, impervious to economic slowdown. They're growing at eye-wateringly impressive rates compared to, more traditional sectors. But, and like I said, that's why we have actually been very fortunate that we've had a very significant allocation to the U.S. over the last 10 years, and our performance has reflected that. But the next 5 to 10 years, it's very unlikely that we will see a doubling from these levels, because I don't think this is the same sort of market. Second of all, we would never try to time it to that perfection anyway.
The only thing I'll say is, if you indulge me a little bit, we are in a time when we've spent a lot of time today talking about the appalling returns for traditional assets compared to where they were. We spent a lot of time talking about central banks, which have changed the value of money, so to speak, and changed the relationship between them and the markets as well. Maybe everything that central banks have done have meant that the technology stocks do have significantly further to run, because we're in a different ballpark here. Maybe the valuation should be much more, given the growth potential.
Yeah, well, which is why we are biased towards equities. If you and taking the sectoral argument is sort of a secondary issue, but even if you just look at the fact that at these low rates should justify higher valuations for equities on a straight discounted cash flow basis. It's a mathematical reality. And I have a lot of sympathy for the argument that slightly higher equity valuations are probably justified. But there's a big difference between slightly higher and ridiculously higher. And what is absolutely not a mistake that we will fall in is to be over-invested at a time where we think that equity valuations become really expensive on an absolute basis. We're not there yet, but that will be one of our triggers to cut.
And what a great point to wrap up the programme. Thanks for your company this morning. I think we've had a... I can only apologise once again. I don't think he has. This could take a while. Thanks for tuning in, everybody. Street Signs coming up next. We'll be back to do it all over again on Monday. Have a safe day if you're in the markets. Bye-bye.
At CNBC, we follow the money. This is the big money.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent.
And then a big deposit. With Romans, it doesn't have to be like this. It doesn't. At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
It's me, the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it. The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids. So you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance, subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Welcome to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. The rally spreads to Europe, where stocks look to close a volatile month on a positive note, amid signs of a cool down in trade tensions just days before fresh tariffs on Chinese goods come into effect.
Former Italian Prime Minister and leader of the PD party, Matteo Renzi, tells me he does not want a role in the new government due to personal issues with Five-Star Movement, but he reassures investors that Rome is open for business.
I cannot stay in the government with the Five-Star Movement. I can vote, vote of confidence, I can support, I can block Salvini, and I can give a message to international investors, please invest in Italy.
Europe's real estate index hits its highest level in a month, fueled by German property stocks, following a report that a planned rent freeze in Berlin could be less strict than previously expected. And Boris Johnson vows to step up the tempo on Brexit talks as the British Prime Minister braces for a showdown in Parliament next week, with opposition leaders ready to ignite attempts to block a no deal. Well, a very warm welcome to Street Signs and happy Friday to you. Markets ending the week on a positive note so far as we can tell, extending gains this morning. The Stoxx 600 currently up about 0.6%. This followed a very solid day here in Europe yesterday where the main benchmark ended more than 1% higher. We saw strong gains across most regions. In particular, we saw some strength in the FTSE MIB closing up nearly 2% yesterday. Of course, a lot of movement on the political front in Italy, some resolution coming with a new coalition formed and Giuseppe Conte leading the way there. So a bit of respite coming through for the Italian stock market. But overall this morning, the gains continue. Now, this, of course, follows a strong day on Wall Street. Yesterday, we saw some conciliatory comments come through from the Chinese Commerce Ministry. So a sense of calm, certainly no escalation at this stage when it comes to U.S.-China trade tensions. We've got new tariffs coming through September 1st, and the prospect of in-person talks between Beijing and Washington signals that will actually take place in September. So overall, that is providing some support to global markets, and Europe is absolutely no exception. Let's take a look at the individual regions. As I mentioned there yesterday, the FTSE MIB outperforming a broader Europe. Now this morning, up about 0.5%. So right in the middle of the board, I would say, relative to the gains we're seeing elsewhere in Europe. The DAX is up about 0.7%. Now, I mentioned there in the headlines within Germany, we're seeing some very strong gains in the German property sector. And that comes after a report in a German newspaper that we may see a planned rent freeze in Berlin come in less strict than expected. And that's providing a boost to German property stocks, providing a boost to the broader European real estate index. FTSE 100 up about 0.4%. Let's move into the different sectors and see what the shake looks like. green across the board. So not only do we have every region trading in the green, but every sector trading in the green this morning. Real estate right at the top, 1.8%, as I mentioned there. German property stocks fueling that rally. Autos, basic resources, industrials, construction, and technology round out the rest of the outperformers this morning. So a clear tilt toward those China-exposed, trade-sensitive sectors as we head into next week. Now, in terms of Italy, let's go into a little bit more detail on where things stand now. Italian Prime Minister Giuseppe Conte is working to create a new cabinet, which he hopes to put before the country's president in the next few days. This after the leaders of PD and Five Star agreed to form a coalition government. Now, Germana joins us from Rome, where she's had an incredibly busy week right alongside all those Italian politicians. And I know you sat down for an exclusive interview with one of the key players, Matteo Renzi. Share with us what is his role is now and why is he so key in terms of what we can look for next out of Italy?
Yes, thank you, Juliana. And actually, I'm standing today. You may notice I've got a different location from where I was yesterday. Yesterday, we're standing in front of the palace where President Mattarella is based. Today, we're standing in front of the Deputy of Chambers, where Mr. Conte is expected to show up shortly and start consultations with all of the different parties about putting that government together. And as we found out through the course of this week, that we indeed have the intention on PD's part and Five Star's part to get together into a coalition government. But big question still about the list of ministers and whether or not that can be approved, mostly by Five Star movements, given their open democracy platform system. So still a few stumbling points to get through. But I did, as you mentioned, have the opportunity to sit down with the former Italian Prime Minister, Matteo Renzi, and just a bit of a history recap here. I wanted to give viewers a bit of the background to Mr. Renzi. Now, you may recall back in 2016, he put forward a referendum on constitutional reform. It failed spectacularly. 60% of the public voted against it, after which he stepped down as Prime Minister. Mr. Gentiloni took over, and then he led the PD party into the elections last year in March, after which we saw a big decline in polls for the election turnout for PD was very, very low. So it was very interesting to see that all of a sudden, the last 15, 16 months or so, we've seen this turnaround, not only for the PD party, but for Mr. Renzi himself, because he's still very much a heavyweight within the PD system. He certainly has a lot of support within the membership. And actually, it was he last week who said, look, maybe this is an opportunity for PD to enter into discussions with Five Star. Salvini has pulled the plug on the coalition. Perhaps this is an opportunity for us to get into government and to start changing the narrative. And initially, Mr. Zingaretti, who's technically right now the leader of the PD party, was not fully on board with that. But eventually, in the last couple of days, we saw that he did indeed relent, which raises a few questions about whether there's internal division within the PD party. And that's obviously a secondary element to think about when we think about the future dynamics of Italian politics. So one question I did ask Mr. Renzi is, many people are talking about the possibility of you spinning off and doing your own thing in the future. What do you say to that?
Everything is possible in the crazy Italian politics. Let me be honest with you. I'm a very lucky man. I became a mayor of Florence, the most beautiful city around the world, when I was 34 years old. I became the youngest prime minister in Italy. I won the competition. The problem is, in Italy, I think, the necessity to invest in a new direction for the future of this country. Unfortunately, I lost the referendum to change the constitution, because my idea was exactly to avoid the proportional system with the same traditional games in the Italian politics. My dreams was, okay, I will invest in a new model more similar to USA or to France, with a winner in the night of election, the election night, and 4 years of stability. I lost in the referendum. 2016 wasn't a very good year to celebrate a referendum in Italy as in UK. Now we will see what could happen in the Italian politics. But before to discuss about my party, about the left in Italy, also in UK, in USA, everywhere there is a discussion about the future of the left. My opinion is, first, We have to block Salvini and his very dangerous idea about relation with Russia, about relation with anti-European parties, and about hate speech against women and black men. Then we will discuss about the internal division of my party. First priority, Salvini. Salvini, please come back to home or come back to beach with the mojito and all the dancing, because this is his dream. Second, we will discuss about politics.
Very interesting, the response there. He doesn't rule out the possibility of perhaps splintering off and doing his own thing in the future. He says anything can happen in these crazy Italian politics. So that's worth bearing in mind as we see the field play out over the next couple of months. But he did, again, reiterate, and he's been reiterating this over and over again, the number one priority right now is to stop Salvini.
Shimon, another topic for investors, a major concern for them, is Italy's relationship with Europe. What did Mr. Renzi have to say about that?
It's a very valid point, because today investors are very much focused on what this new coalition government could mean in terms of the relationships, the diplomatic relationships that Italy has with Europe, and also when it comes to the negotiations on this important budget. We're getting into the draft budget season come October. And you could say that the previous coalition government was extremely combative in nature towards Europe, not just from Mr. Salvini, but also actually from the five-star leader, Mr. Di Maio. You also may remember a diplomatic incident not so long ago where Mr. Di Maio actually met with the head of the Yellow Vest investors in France, and that sparked a bit of a tussle between the two countries. So no doubt that is still lingering on Mr. Macron's mind, and it's something that actually may come back to bite Mr. Di Maio right now. But PD has said that they want to turn the page with Europe. They want to reconcile the relationship between Italy and France. And yet one of the bigger questions, Giuliano, obviously we did have European elections take place this year. We've got new European commissioner coming in under Ursula von der Leyen. Perhaps this is a time to be ambitious in terms of how you think about Europe's future, particularly when it comes to that growth and stability pact. So I asked Mr. Renzi about that. Let's take a listen.
We need a change in the economy politics, not from now, but from from a long time, and I proposed that when I was Prime Minister. Maybe you remember in 2015, President Jean-Claude Juncker, for the first time, used this expression flexibility against the idea of austerity and the Pact of Stability and Growth. I think it's important to have a pact for stability, but without growth, there is not stability. Without growth, the countries risk the instability, and Italy show that very clearly. My view, so, is we need a new strategy for European institutions. And let me be very clear. Today, the risk for Europe is not populism, is not sovereignism, is not nationalism. The risk is the lack of vision of institutions. The Euro bureaucracy have to change. And it's very important for Ursula von der Leyen and all the team who will support her to be very clear and committed about the necessity of a new order of development in Europe. And I'm confident, I believe in Europe, I'm very proud to be European, but we need a different Europe.
Very proud to be European, but we need a different Europe. Matteo Renzi is saying there that the biggest risk to Europe today is not nationalism, it's not populism, it's the lack of a vision and being able to reinvent oneself and think forwards and think about how you can re-energize. Because at the end of the day, how can you have a growth and stability pact if you've got no growth? The lack of growth will lead to instability. So perhaps in the future, we may be looking at a Europe, a broader Europe, that's focus will be primarily on reinvigorating European growth, and perhaps that could bring a little bit more stability to the bloc as a whole, and certainly a question that's not going to be answered overnight and one to pose for the new European Commission.
Jemana, thank you so much for your reporting from Rome. Well, let's push on to another story, of course, in focus this week, Brexit. British Prime Minister Boris Johnson has pledged to intensify efforts to secure a Brexit deal days after a controversial decision to suspend Parliament. Johnson has instructed his negotiating team to meet EU counterparts twice a week in the run-up to October's European summit. Johnson said, quote, "While I have been encouraged with my discussions with EU leaders that there is a willingness to talk about alternatives to the anti-democratic backstop, it is now time for both sides to step up the tempo." Meanwhile, opposition Labour leader Jeremy Corbyn has vowed to bring forward legislation aimed at stopping a no-deal Brexit and preventing prorogation of Parliament as soon as MPs return from recess next week.
We will be back in Parliament on Tuesday to challenge Boris Johnson on what I think is a smash and grab raid against our democracy, where he's trying to suspend Parliament in order to prevent a serious discussion and a serious debate to prevent a no-deal Brexit. What we're going to do is try to politically stop him on Tuesday with a parliamentary process in order to legislate to prevent a no-deal Brexit, and also to try and prevent him shutting down Parliament during this utterly crucial period.
Meanwhile, the ECB's Sabine Lautenschlager said it is too early for a, quote, huge package of stimulus measures. In an interview with Market News, Lautenschlager described an asset purchase program as a measure of last resort. The ECB's Olli Rehn has previously said the central bank will unveil stimulus measures in its September meeting, including bond purchases to combat an economic slowdown. Christine Lagarde has argued the ECB still has room for further rate cuts. The likely future ECB president also stressed the central bank must stand ready to act against a potential downturn. However, Lagarde warned of the dangers that low interest rates pose to the banking sector. Now let's bring in our first guest, Christian Schultz, Director of European Economics at Citi. Thank you very much for joining us this morning. Well, let's kick off there on the latest commentary from various members of the ECB. In the last couple of days or so, we've heard some relatively hawkish comments from Nowotny, for example, and then you just heard there the other comments from Lautenschlager as well. Do you think there will be enough hawkish members at the ECB to prevent this big stimulus package from coming through in September?
No, I don't think so. The accounts of the last meeting were pretty clear that they want to act and that it's going to be a package. All the necessary parts of that package were already mentioned, negative or deeper negative interest rates, some form of renewal of the asset purchase program, as well as a change in adapted guidance, perhaps a state or even a threshold-based guidance. So yes, there is some resistance, and you've mentioned the usual suspects there, but I think there's a clear majority for action.
And in terms of the economic impact or the potential economic impact of this package, should they deliver it, as you just outlined, what do you think at this point? How effective will lower rates, more asset purchases be for stimulating growth in the euro area?
Well, if you ask the question that way around, you have to be skeptical, right? We are at the lower bound. Interest rates are already very low. Maybe via the exchange rate, there's a little bit of stimulus to be had, but it's not going to work immediate. Monetary policy always works with a lag, so perhaps second half of next year is the earliest that we might see some impact. But of course, you could ask the question the other way around: what if the ECB does not act? And I think that would be the worst outcome, because that would mean the ECB tells us it can't do any more, it won't do any more, and markets will price out any action, and with all the negative consequences that brings for the real economy as well. But ultimately, it's not Mario Draghi or Christine Lagarde that holds the key to more growth. It's Olaf Scholz, the German finance minister.
Well, we're going to pick up on Germany and Olaf Scholz in just a moment, but just rounding out the conversation about on the monetary policy front, how significantly different do you think things can actually be under Madame Lagarde? As you just said there, I mean, a lot depends on the fiscal side of things, but within the ECB, how much of an impact is it going to be to have her at the helm?
Well, hopefully not very much. We need continuity. The ECB under Mario Draghi has been crucial, not just in trying to get inflation back to target, but obviously also in terms of defending the Eurozone against the biggest crisis ever faced in 2011, 2012. And hopefully Christine Lagarde will provide continuity. We think she will in many senses. She's been deeply involved in the crisis management in her role as French finance minister and later as IMF head. So in that sense, I think this help for reforms approach that Angela Merkel but also Mario Draghi have installed will continue. In terms of monetary policy, she's obviously less she has less record, you'd have to say. I think Mario Draghi is going to give her a framework at the next meeting with the guidance, with the package that they're going to announce to follow through on. But in a year's time or so, when that is up for renewal, I guess, we'll see how she acts. But continuity is the name of the game here.
If we can just look a little bit more closely at Italy, just before we began this conversation, we were speaking to Shimano, who's been reporting from Rome on the latest developments there. In terms of the policies of this new coalition that's come together, do you have a sense yet or a prediction as to whether and which structural reforms will be on the agenda of this new PD five-star coalition?
I doubt it, I must say. I mean, so far it seems that the conversation between the two parties is more about who gets which post rather than which policies. It has to be said, in terms of economic policy, Lega, with its tax cuts, supply side and business-friendly approach, was probably the more market-friendly part of the coalition so far compared to the five-star movement, with more sort of supply-constraining reforms such as the universal income and these sorts of ideas. And the PD, centre-left party, which has moved perhaps a little bit to the left since Matteo Renzi is no longer the prime minister and the party leader, is obviously not going to necessarily add a big touch of pro-growth and pro-business reforms either. The good news is that fiscally things look a lot better now than we thought they would at the beginning of the year. So there's a bit more scope perhaps to find a compromise with Europe and guide the economy into next year without too much austerity, without too much cutting back, and without too much risk of an excessive deficit procedure. But in terms of structural reforms, I think you have to be skeptical.
Christian, thank you very much for weighing in. I promised you we would move on to Germany, which we will do after this short break, so stay with us. Christian Schultz, Director, European Economics at Citi. Well, just a reminder that you can follow us on Twitter at StreetSignCNBC, and you can tweet me directly at CNBC Juliana if you want to weigh in, have any thoughts, questions on what we're discussing on this show. Well, coming up after the break, Germany's manufacturing sector continues to weigh on the economy, with concerns mounting the country will enter a technical recession in the third quarter. We'll take an in-depth look after the break.
Joe, Marketing Sales Director. Meet Tom, Director of Marketing Sales.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Welcome back to Street Signs. Let's take a look at Germany's biggest real estate companies. They're performing quite strongly this morning. You can see gains of more than 10% in some cases, and that comes after Blid reported a planned rent freeze by Berlin's regional government could be less strict than previously thought. Citing attendees of a meeting between governing political parties, the paper says Berlin could allow slight rent increases in line with inflation. So clearly a development very welcomed by the market there. Across the board, we're seeing strong gains, and that has lifted the broader European real estate index to its highest level in a month. Well, sticking with Germany, German retail sales fell by more than expected in July, declining by 2.2% compared to June. However, year-on-year sales growth remained solid at 4.4%, with much of that growth being driven by e-commerce. Now, Germany's economy, of course, contracted in the second quarter. Official statistics confirmed this week as exports fell at the fastest pace in 6 years. The weak reading adds to growing jitters about the health of Europe's largest economy. Let's get right back out to Christian Schultz, Director of European Economics from Citi. So let's push on to German fiscal stimulus prospects. Before the break, you suggested that it doesn't come down to the ECB at this point. It's Olaf Scholz who we need to be watching. What are you expecting on this front?
Well, the government has already adopted a budget for next year, which foresees the black zero stays. So the government doesn't want to borrow. That very much limits the scope for fiscal stimulus, at least at the federal level. I think they'll end up doing a little bit of stimulus anyways. The Green movement, and I think in particular with the regional elections coming up where the Greens will be doing well, will probably allow them to do a little bit of stimulus. And we have to watch what the state governments, what the municipalities who have a lot of the big fiscal surpluses in Germany will do. So all in all, I think there will be some modest fiscal expansion next year. That's a good thing because there was the risk for a while that Germany would do pro-cyclical tightening next year in order to defend the famous black zero. I think bigger stimulus will only come in 2021. That's when the government has already said they're going to abolish the solidarity surcharge, at least for many households. I think that could be the platform for a bigger stimulus.
Your point about it more coming from the regional governments, I want to just ask you about the story that's come through from the Blid overnight, and that's around Berlin's regional government considering less strict than previously thought rent freezes in Berlin. And we were just showing their German property stocks performing very strongly on the back of this. How significant is this development in your view?
Well, in a way, it shows the dangers of an election in Germany where the left, so the SPD, the Green, and the Left Party form a majority government. They are already doing this in Bremen and so in one small state in Germany, as well as in Berlin and some others where they're working together. It is these three parties, because of the strength of the Greens, are close to a majority in the polls. So if we were to get an election, it is quite possible that we would end up with this left-wing alliance. And if that happens, Berlin could become a blueprint for the whole country. These parties seem to be keen on intervening in the markets for various things. You mentioned the story on rents. There's another story that they might try and forbid negative interest rates. So these interventions will increase. That's probably not the recipe to unleash growth in Germany. I think we need structural supply-side reforms once again on that side as well. And I think actually these structural reforms, as everywhere, will always be more important for growth in the long run than short-term fiscal stimulus.
And what about taxes then? Just yesterday we heard from Peter Altmaier, the economy minister, proposing a package of tax cuts, including cuts for the Mittelstand. So this is the small and medium-sized businesses that account for nearly 60% of jobs in Germany. Just for our viewers' knowledge, how much of a difference can tax cuts like these actually make?
Oh, they can make a big difference. Germany has a huge state quota, so almost half of the economy goes through the pockets of the states one way or another. If you reduce that, it opens the way for private enterprise, irrespective of whether it actually means stimulus or not, because Mr. Altmaier mentions tax cuts, but presumably he wants to finance that with expenditure cuts elsewhere. So it's not really stimulus he's talking about. That is a structural reform, which I think would be welcome and would be good to boost economic growth. All depends on the details, as always. Does it set the right incentives? Is it fair across the spectrum of companies? Is it only favoring a few rather than the many? But in principle, I think it's the right approach.
And finally, Christian, in terms of this cyclical downturn we've seen in manufacturing, it's of course extremely hard to call the bottom. So perhaps a more reasonable question would be, how have we seen companies adjust to the slowdown in the manufacturing sector in terms of their production capacity and hiring amid this weakening in demand?
Well, I think you're putting the finger at exactly the right spot. I think for a long time, companies didn't adjust at all. That's why we saw inventories shoot up. That's why we saw the labor market continuing to do well. That's what you do if you try and look through a cyclical downturn. But I think it turns out, and it's becoming clearer and clearer, that this is not just a short cyclical downturn. This is driven by broader global forces, but also by domestic structural issues. So companies, I think, are starting to adjust. They're bringing down the inventories. They're reducing production levels, production plans. They're probably investing a little less in the capacity as well. And they're starting to fire people, at least not to hire as much anymore. This is bad for the economy in the short term, but it shows that there is still some flexibility within the German economy and that they are going to adjust. So this is, in my view, the beginning of the turnaround, but I don't think that the turnaround will actually happen before the second half of next year.
Excellent. Thank you so much for your thoughts on such a wide range of European issues. Christian Schultz, Director, European Economics, Citi. Well, coming up on the show, trade tensions ease as the U.S. and China signal face-to-face negotiations will resume in September. Stay with Street Signs.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
This meeting of the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids. So you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Welcome back to Street Signs. I'm Juliana Tattlebaum. These are your headlines. The rally spreads to Europe, where stocks look to close a volatile month on a positive note amid signs of a cool down in trade tensions just days before fresh tariffs on Chinese goods come into effect. Former Italian Prime Minister and PD member Matteo Renzi tells CNBC he won't take up a role in Italy's new government because of personal issues with the Five-Star Movement, but assures investors that Rome is open for business.
I cannot stay in the government with the Five-Star Movement. I can vote the vote of confidence. I can support. I can block Salvini. And I can give a message to international investors, please invest in Italy.
Europe's real estate index hits its highest level in a month, fueled by German property stocks, following a report that a planned rent freeze in Berlin could be less strict than previously expected. And Boris Johnson vows to step up the tempo on Brexit talks as the British Prime Minister braces for a showdown in Parliament next week, with opposition leaders ready to ignite attempts to block a no deal. Let's take a look at European markets and see where things stand about an hour and a half into trade on the last day of the week and the last trading day of the month. We are in positive territory across all regions here in Europe, across all sectors as well. Now, overall, we are seeing some support from relative calm on the U.S.-China trade front. Yesterday, we, of course, just moments after the session began, heard from China's Commerce Ministry that they want to continue trade relations with a calm attitude, and they're opposed to an escalation in tensions between Beijing and Washington. Now, the two sides, both Beijing and Washington, have signaled they will resume in-person trade negotiations in September. So a bit of support coming from that, but of course we've got tariffs coming into effect on September 1st, so plenty of uncertainty still looms. Let's take a look at FX markets and see where things stand on the currency front. The euro currently retreating about 0.15% versus the dollar. In the last 24 hours or so, we did get some hawkish commentary from a couple of ECB members, so some perhaps digestion there of what that means for a potential bazooka stimulus package at the September meeting. The pound is down about 0.15% versus the dollar at 1.217. Next week, of course, the big showdown in Parliament. We'll look to see how opposition leaders react to Boris Johnson's move this week to suspend Parliament. And finally, let's take a look at U.S. futures. We are looking at gains across the board, according to the implied open for the three major indices there. That follows a rally yesterday when we saw all those indices gain more than 1%. And again, the mood on Wall Street boosted in part by those comments from China's Commerce Ministry and some relatively upbeat comments around the trajectory of U.S.-China trade relations. Now, on that front, the U.S. and China have signaled, as I mentioned, they will resume in-person trade negotiations in September. President Trump said fresh discussions taking place would be held at a, quote, different level in a Fox News radio interview. He didn't elaborate on what that meant, but a White House official told CNBC that, quote, both sides remain in communication at various levels. Now, a Chinese foreign ministry spokesperson said face-to-face talks for next month are being discussed. Eunice Yoon has more from Beijing.
2 days until new tariffs kick in. On Sunday at midnight Eastern Standard Time, or noon here in Beijing, $125 billion worth of Chinese goods will be subject to a 15% U.S. tariff instead of a 10% one. And 1 minute later, China will impose tariffs on its first tranche of $75 billion of U.S. goods in a range of 5 to 10%. 1,717 items are on the list, including agricultural products like soybeans. China's urging the U.S. to call off the additional tariffs, saying the move would create favorable conditions so the two sides can make progress at the September talks. The Commerce Ministry hinted that Beijing might not retaliate against the newest tariffs. The Trump administration says senior officials are speaking over the phone, though no word on whether it would lift the taxes. The U.S. business community is calling for an end to the duties. The head of the U.S. Chamber wrote a piece in the Washington Post entitled, "Lift the Tariffs and Restart Trade Talks with China." The chief of the U.S.-China Business Council said his members are in China for the long term and are encouraging the two sides to get back to the negotiating table. Meanwhile, the Nikkei is reporting that authorities are putting more restrictions on the banks on converting the yuan into other currencies and on real estate developers' access to foreign currency bonds, possibly a sign the authorities here are getting nervous about capital flight with a weaker yuan. Eunice Yoon, CNBC Business News, Beijing.
Now, as I said, we're on the last trading day of the month of August, which is on pace to be a down month for U.S. and European stocks, spurred by recession indicators in the Treasury market and ongoing trade tensions. In the U.S., the Dow and S&P are lower by almost 2% month to date, while the Nasdaq has fallen by 2.5%. Meanwhile, safe haven assets like gold and the yen have enjoyed a relatively strong month. Now, to help us understand what we saw in the month of August, but more importantly, what we can expect moving forward, Anna Harris, Global Head of Equity Portfolio Strategist, State Street Global Advisors. Anna, let's kick off with the U.S. markets. And I just mentioned there, major indices in the U.S. are off around 2%, give or take, on the month. But in the last week or so, we've seen markets pare back those losses. And it's been a pretty good month in terms of positive momentum. Do you think that this positive momentum can continue into September?
It can. And if you think about it, actually, if you look at the year to date, markets are still up, especially in the US. And if you think about the economic indicators, be it from personal consumption, be it even if manufacturing is a bit weaker in some of the most recent readings, the economy is still fairly robust. So we are seeing a slowdown. And I think markets more recently have realized that, yes, it is a slowdown, it is coming. But we don't anticipate a recession. And I think this jittery in markets, this volatility, the increased volatility, we have been expecting it. And it's typical of let's call it kind of a late cycle recession, kind of a slowdown, but not a recession.
If I look at two of the key indices in the U.S., the Dow Jones and the Dow Transportation Index, and the Transportation Index, which just to remind you is a 20-component index of rail operators, airlines, truckers, package delivery companies, and it's typically seen as a barometer of economic activity. That index has underperformed the broader U.S. market in the month of August. It's in correction territory, off about 13%, I believe, from its 52-week high. Is this not a signal that the rest of the market is due for a steeper pullback?
I guess there are some signs of a slowdown, and we've seen also signs of slowdown in some of the kind of macro indicators of production indicators. The whole kind of conversations around the trade talks and slowdown back and forth that we've seen over the last few months is making investors nervous, and as such we see a potential, a little bit of a paring down of some of the activity. Again, we don't expect this to be necessarily structural. Again, as part of that slowdown as we get into late cycle, and although it's just kind of reflecting that just nervousness of potentially investors and companies slowing down a little bit on their activity in face of uncertainty that we've seen over the last few months.
And now switching on to Europe, but sticking in the stock market, the Stock 600 is also down just about 2% for the month. Within that, the FTSE 100 has been the real underperformer, down more than 5%. Of course, a lot of idiosyncratic in there. How are you guys thinking about the UK market at these levels?
If uncertainty is kind of the word of the day, more so in the UK than anywhere else in Europe. And we talked about it today already in terms of some of the news we're getting from the government and potentially on negotiations around Brexit. I guess what the UK economy has, it is very much external looking in terms of the exports and not as much weight to the domestic consumer. If there is a global trade slowdown and if we see a kind of just the economy slow down across the board, UK companies will be affected, especially large UK companies like represented in the FTSE 100. They're very much export driven. And the uncertainty around that will have a play on their results. And then the currency will also work there. And it may be things will make it easier from an export perspective, but the costs along the supply chain will get more important for some of these companies. So it's not surprising to see them underperform. But again, it is in the context of a fair amount of uncertainty surrounding the UK and the UK economy and politics as well.
Looking further ahead, of course, as you say, a huge amount of uncertainty in terms of what could happen. But, there are several economists who believe that the UK economy will be more resilient than the market is currently pricing, even if we see no deal happen on October 31st. So what kind of bounce back could we see in the FTSE 100 and the FTSE 250 in the back half or, in 2020 overall, given where we are in terms of valuations now?
I guess we could see if, again, the currency continues to deteriorate, and we expect that to happen, especially if we have a bit of a shock again with a no Brexit or no deal coming up in October time. That can benefit some of the exporters and some of their numbers in terms of potentially improving those results and those margins. So again, you could see potentially a recovery, but we do have other weaknesses within the economy and the amount of uncertainty that will still carry on playing out. So we may not see the FTSE 100 recovering for a while, but in terms of the kind of solid fundamentals of the economy, they are still there, but we are just following suit in terms of the global slowdown that we're seeing elsewhere.
And then finally, another, in addition to the political uncertainty and somewhat connected, of course, the yield curve inversion has been a huge driver of the sell-off we've seen in equities, given the signal it sends around incoming recession. What are you thinking here about the downward move we've seen in rates? Is it actually signaling a recession, or could it just be signaling, a long period of stagnation or slowing growth?
I think more the latter than necessarily the former, right? I guess we've been kind of calling that for a while. They're going to be lower for longer, and I think the kind of the bond market has kind of got to that realization over the last few months, last 6 to 9 months, and then we'll see that coming through on the yield curve, and then kind of as a forecasting recession. It doesn't always happen, and sometimes it can happen in the next 4 months, the next for several years. So sometimes it's a little bit difficult. You have to go back to the fundamentals. You have to go back to the strength of the companies and their balance sheets, and the strength of the economies in general to see if it is actually forecasting a stronger slowdown than we'd see already in the numbers. So, and again, if you think about it in historical terms, we have been through periods of low interest rates before, and these periods can be sustained for a fair amount of time. I don't think what investors should do is that they shouldn't expect to go back to normal levels, because there isn't a normal level. There isn't a mean reversion to be observed. And I think we're going to have to get used to this type of environment with not much coming in terms of returns, in terms of yield from the fixed income markets.
All right. It's a difficult environment to find those returns. Thank you very much for your insight. Anna Harris, Global Head of Equity Portfolio Strategist, State Street Global Advisors. Investors have withdrawn $13.8 billion from emerging market equities so far this month, according to the IIF. It's the worst month of outflows since President Trump's election in 2016. The IIF said slowdown concerns and increased trade risks prompted the exodus. And in some corporate news for you, Daimler shares are higher after Kepler Chevreux upgraded its rating of the car maker from hold to buy. The broker said it expects earnings at the company to improve in the second half of the year. They also argue Daimler has been overly derated. And BNP Paribas in the banking space is eyeing a bid for Deutsche Bank's equity derivatives business. That's according to Reuters sources. The French lender is hopeful it can secure a deal within the next few weeks. Now, the move is separate from BNP's plan to snap up the German bank's prime brokerage unit. Both BNP and Deutsche declined to comment. And some fresh news on Huawei. U.S. authorities are reportedly probing fresh allegations of technology theft by Huawei. According to the Wall Street Journal, prosecutors are looking at instances of alleged property theft over a number of years, as well as Huawei's recruitment strategy. The Chinese tech company has been caught in the crosshairs of the U.S.-China trade war with Washington, labeling it as a national security threat. And Saudi Aramco is reportedly considering a plan to split its IPO into 2 stages. According to the Wall Street Journal, the state-owned oil giant is looking at first listing some shares on the Saudi stock exchange later this year before an international listing in 2020 or 2021. Dan has the full story.
There's new reporting on Saudi Aramco's highly anticipated secondary listing. The Wall Street Journal says Tokyo is now firming up as a destination of choice, with top Saudi officials saying uncertainty in Hong Kong and Brexit worries in the UK could take those exchanges off the table. Speaking to unnamed sources, the Journal said a New York listing was still a preferred choice for the Saudi Crown Prince Mohammed bin Salman, but officials cautioned him against it, as it could expose Aramco to US litigation or disclosure hurdles. While Tokyo doesn't have the international allure or liquidity of other international equity markets, it's not necessarily a surprise frontrunner. Japan is a major customer of Aramco's crude, and it would also offer the firm a stronger gateway to the Asian markets. On the timing of a potential IPO, it's also reported that some $50 billion worth of stock could be offered on the domestic Saudi exchange as soon as this year, with a follow-on offering on an international exchange sometime in either 2020 or 2021. Saudi Aramco has said that no final decision has been made about where, when, or how any listing would take place, and all options remain on the table. The timing is also, of course, highly dependent on the outlook for crude oil prices, which remain in bear market territory. Back to you.
That was Dan Murphy reporting on the latest when it comes to the Saudi Aramco potential IPO. Well, coming up on the show, it's sports time. Europe's top football clubs find out who they'll be facing in this season's Champions League. Reaction to the draw on the way.
Imagine a better way to shave with no water and no nicks, bumps, or cuts.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent, with Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about, and hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, this summer we've got loads of exciting activity ideas to keep the kids entertained without even having to leave London. Snuggle up indoors and go create your very own pencil holder or paint a picture while sitting in a pillow den. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Welcome back to Street Signs. Let me give you an update on where things stand in Hong Kong. The prominent Hong Kong pro-democracy activist Joshua Wong has been arrested ahead of another weekend of planned protests in the city. Wong's pro-democracy party, Domocisto, says he was, quote, suddenly pushed into a private car and escorted to police headquarters. 2 other prominent campaigners were also arrested, adding to the almost 900 people that have been detained since protests broke out in mid-June against China's rule over Hong Kong. Wong became the face of the Hong Kong umbrella protests in 2014. He had been released from prison in June after serving a 5-week sentence for contempt of court. Meanwhile, President Trump has canceled a trip to Poland this weekend, saying he wants to stay in the U.S. to help the government prepare for Hurricane Dorian, which is bearing down on Florida. Vice President Mike Pence will travel to Warsaw in his place to attend events commemorating the 80th anniversary of World War II. Well, I promised you some sports this morning, so here we are. The group stage draw for this season's top football club competition, the Champions League, has been revealed. Holders Liverpool kick off their title defense with trips to Italy, Austria, and Belgium. Adam joins us now with more.
Thank you, Juliana. Yes, here we go again. The Champions League is back after the group stage draw was made, as you quite rightly pointed out. Let's have a quick run through who is in which group this time around. Starting in Group A and coming out of Pot 1 was Paris Saint-Germain. Pot 2 was Real Madrid. They could be contending the final maybe next year in Istanbul and also, speaking of Istanbul, Galatasaray are in that group as well. On May the 30th, they'll have one eye on playing at the Ataturk Stadium, just maybe. Now, Bayern Munich and Tottenham, they are the top seeds in Group B. Tottenham, of course, getting to the final last year, only to lose to Liverpool. Manchester City, the domestic treble winners in the Premier League last year, but wouldn't they just love to win the Champions League? Never done better than the semi-finals, of course. Now, Juventus, they are craving the Champions League.